If you are someone who likes stability and you don't want your money to move around too much, real estate might feel safer. But if you are comfortable with some ups and downs for the chance of a higher reward, then stock market might be the best choice for you. Nigeria's population is projected to hit 400 million people by 2050. This makes Nigeria one of the fastest growing countries in the world. There are more people moving into cities every year than ever before. What then happens when all these people in their millions need a place to live? Real estate, right? What happens when companies are looking to expand their business to meet the needs of the people? They raise capital from the stock market, right? So the big question is, with the potentials of great returns from both sides, where should you put your money? Is it in real estate or in stocks? Which one actually gives you the best chance to grow your wealth faster? If these questions are on your mind, you are in the right place. Today, we are going to compare both, examine the opportunities, the risks, and finally help you decide where your money might grow best. If you are yet to subscribe to this channel, please subscribe and like the video. Alright, before we jump into comparing real estate with stocks, let's first understand both investment options. We cannot just walk into a business without knowing the rules, right? So let's start with real estate. Nigeria has one of the fastest growing populations in the world. Over 200 million people call Nigeria home today, and that number is expected to grow rapidly. In fact, Nigeria's population is expected to double by 2050, making it the third most populous country in the world, right after China and India. This population growth is a huge driver for real estate investment. More people mean more demand for housing, offices, and commercial spaces. Many of these people are moving to the cities, especially Lagos, Abuja, and Port Harcourt. These cities are growing rapidly, and with that growth comes a boom in property markets. So, real estate in Nigeria is like a hot cake, right? People are buying land, apartments, and commercial buildings at a faster pace than ever before. But it's not just population growth. Urbanization plays a big role. More people are moving from the villages to cities, looking for better jobs, better schools, and a better life. In cities like Lagos and Abuja, property values are increasing every year as demand for space grows. Just like the real estate sector, the Nigerian stock market has also been growing over the years. Many Nigerian companies like Dangote, Access Bank, MTN, and a whole lot of others have been growing tremendously over the years. They have been attracting local and international investors. Nigeria actually has a very active stock exchange with a lot of potentials for investors to make a lot of money. But before you jump into either of real estate or stocks, you need to understand the key factors that are driving both real estate and stocks in Nigeria. First off, real estate is one of the best ways to grow your wealth. Real estate offers the potential for high returns, especially if you are buying property in the right location. Imagine purchasing a land in Lekki or a building in VI or Ikoyi 5 years ago. Today, you'll be sitting on serious capital gains. But that's not the only advantage. Real estate also offers the opportunity for rental income. If you buy a property in a high demand area, you can rent it out for a steady income stream. This can give you cash flow every year, right? For many Nigerians, this is a great way to build wealth. But despite the huge potentials for great returns, real estate also comes with its own challenges. First, let's talk about liquidity. Unlike stocks, where you can buy and sell in minutes, selling real estate takes time. If you need money fast, selling a property can be very difficult. It's not always easy to find a buyer, and if the market isn't doing well, you might not get the price you are hoping for. Also, real estate can be affected by factors like the economy, government policies, and even changes in infrastructure. For example, if government changes land use laws today, it will affect the value of a property. And of course, the location matters as well. A property in a well-developed, easily accessible area like Lekki, Ikoyi, VI, Magodo, or Ikeja will appreciate faster than one in remote areas or the suburbs. So before you invest, make sure you are choosing the right area. Now let's talk about stocks. Stocks are like the fast track to growing your money. And for those looking for quick returns, the stock market might be the right choice for you. One of the biggest benefits of stock is diversification. When you invest in stocks, you can spread your money across different companies in different industries. You can do banking, telecom, oil, and so on. Just mix all of them up, right? This helps you to reduce your risks because if one stock drops in value, others will appreciate and make up for that difference, right? But like everything in life, there's a downside to stock as well. The stock market comes with its own set of risks. The biggest risk is volatility. Stock prices can go up and down in a short space of time, and factors like politics, economic changes, and companies' performance affect stock prices. For instance, during times of economic downturn, stock prices can fall, and this can result in a significant loss for you. Unlike real estate, which usually appreciates over time, stocks can be more unpredictable. Also, the performance of individual companies can make or break your investment. A well-performing company can bring you great returns, but a poorly performing one can leave you with losses. Please like this video and subscribe to the channel if you have not yet subscribed. Now that we know the advantages and risks of both the real estate and the stock market, let us answer the question, how do you choose the right investment? The first thing you need to ask yourself is, what are your financial goals? Are you looking to grow your wealth slowly over time, or do you want to see faster returns? If you are thinking long term, real estate might be your best bet. But if you are aiming for faster, short-term gains, trading in stocks could be more beneficial to you. Secondly, you need to consider your risk tolerance. How much risk are you willing to take on? If you are someone who likes stability and you don't want your money to move around too much, real estate might feel safer. But if you are comfortable with some ups and downs for the chance of a higher reward, then stock market might be the best choice for you. And finally, think about how much time you have. Real estate is a long-term investment. It can take years for your property to appreciate to deliver reasonable capital gains. It will take longer if the property is put up for rent. Stocks, on the other hand, can give you returns much quicker, but they also come with more volatility. So which path should you take? Real estate or stocks? Well, the choice really depends on your financial goals, how much risks you are willing to take, and how long you are planning to invest. If you are looking for long-term growth and potentials for consistent returns, real estate might be the way to go. But if you are okay with risks and you want quicker returns, stocks might be the better fit. The most important thing is to do your research, seek professional advice if you need one, and make sure you are investing in what works best for you. If you enjoyed this video, don't forget to like, share, and subscribe. And if you have any question or thoughts, drop them in the comments. Watch any of these two videos on the screen. See you in my next video. Thank you.